Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with a scenario where we do take the all-time high but then correct to the downside to also take the 56k low in an expanding flat, a 3-wave A, 3-wave B and then a 5-wave C, after which we then expect continuation to the upside. Currently working on this wave B, the most common target area for B is between the 1.236 and the 1.38 Fibonacci. Taken from the start to the end of wave A, it gives you a target between 77.9k and 80.4k. If price would move to the upside and touch the 1.618 at 84.5k, it will significantly reduce the probabilities for this scenario. Inside wave B, the most common structure is a zigzag family structure, either a simple zigzag ABC 535, a double zigzag WXY, or a triple zigzag in a WXYXZ. However, a triple zigzag is very rare. In this scenario here, we're looking for a double zigzag WXY, as this first structure to the upside does count better as a 3-wave zigzag. We're then now looking for a wave X, and the most common target area for your wave X is between the 0.382 and the 0.618 Fibonacci, taken from the low to the high of W, giving you a target between 66k and 62.4k. If price would move to the downside and hit the 0.7 Fibonacci at 61.1k, it will significantly reduce the probabilities for a double zigzag to the upside inside wave B, which therefore means it also decreases the probabilities for this scenario becoming an expanding flat. The second scenario is the most bullish scenario, where we have a finished wave 1, look for 2 and continuation to the upside in a wave 3. The most common target area for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. The 382, which we have hit so far, is an uncommon target for a wave 2 at 66k, and the 886 is very rare. Invalidation is taking the low. What is not that great about this scenario is the positioning of your wave 1. If we finish wave 1 at this high over here, then we can count a 1, 2, 3, 4, 5-wave structure. However, on some of the charts, including this one here, this high is actually lower than this high. So you have a truncated wave 5 in a 1, 2, 3, 4, 5, which is incredibly rare. If we move wave 1 to this high over here, then we need to count an impulse in this first structure to the upside. However, on the lower time frames, that means that we then have to count a wave 1, 2, 1, 2, 3, 4, 5 to finish wave 3. This is your 4, 5. In other words, 1, 2, 3, 4, and then a wave 5. This wave 4 is the same degree as this wave 2. Now, most commonly, a wave 4 is longer in time than a wave 2. It is not a rule, it is a guideline, right? It is something that happens most often. Probabilities are on the side for a wave 4 to be longer in time than a wave 2, but that is not the case here. Okay, that's not necessarily a problem. But what does lower the probabilities for this to be a wave 4 compared to this wave 2, besides time, is the retracement. Because if we take a fib from the low of 2 to the high of your wave 3, and toggle on the common target area for a wave 4, then you can see that price here did not retrace to generally the minimum target for a wave 4, which is the 236. A wave 4 retracing to not even the 0.236 is very rare. Also, if we look at this impulsive move to the upside here, preferably and by far most commonly, the highest amount of volume is inside your wave 3, for then your wave 1, 2, 3, 4, 5, where you eventually, after a wave 3 to the upside, want to create a wave 4, another move up in 5 on lower volume. However, here we have the high made on the highest amount of volume. So this is your 3, 1, 2, 3, 4, 5, but your wave 5 has higher volume than your wave 3, which is not something that you like to see. So it does make counting an impulse to the upside of the 56k low very awkward indeed. If we are looking for a wave 2 nonetheless, then preferably your wave 2 is ending after the 0.382 fib time taken from the low here to this high at this moment in time, sitting on the 21st of June. Now, with regards to some support levels to the downside for both of these scenarios, looking for your wave X or looking for your wave 2, first of all, we have a daily gap here. You can see that we have an order block, price moving impulsively to the upside and creating another red day. This left a gap here between 64.6K and 63.1K. Generally, when you hit a gap for the first time, you expect some sort of support at 64.6K. If it fails and eventually price is closing a daily candle inside the gap, the probabilities will significantly increase to fill the gap to the downside and move to 63.1K. If we combine the gap with the speed fan, which I took from this low to the second high here, you can see that the gap is also in confluence with the golden pocket of the speed fan. And a quick side note, if you actually take it to the high on my chart, we're currently at the 0.75. But I do like here the confluence between the gap and the golden pocket area, which is quite nice. If we then also open the volume profile of this whole range to see what the volume has done so far inside this range, you can see that we are now below the point of control and the value area high is at a similar level as the low of the gap as well, adding for a nice bit of confluence. And then finally, a support resistance area in this range, which has played an important role, is also at this area over here. You can see here we had resistance, support, little dip below, but eventually again ranging on top, another dip below acting as resistance, and now we might come back once again. So this area is very important on the chart, and therefore the most important support area we have arguably on the chart right now is the area between, let's say, 63.5K and 62K, which then includes the support resistance area, the value area low, the golden pocket speed fan here, low of the gap, and we have, not to forget, a daily order block here as well. So it's a great area of support for price, and definitely an area I'm going to keep an eye on for potential longs to the upside to move towards the all-time high, as in both of these scenarios we are looking for the high to be taken before anything else, right? And then we'll take it from there. Now, another scenario, which is the most bearish scenario, and I just want to cover this because the probabilities are low, is the zigzag here. So we then have a 5-wave leading diagonal in A, B, and then look for a wave C to the downside. Now, the reason the probabilities are low is because of wave B here in particular, because on some charts, this high here has taken this high, which means that if we look for a zigzag in a 535, you can't end wave B here. And the reason is that if you would end wave B here, you need to look for an impulse in C, 1, 2, 3, 4, 5. But a wave 2 is never allowed to take the origin of your wave 1. And on some charts, that is exactly what happened. So that means wave B has to move to the right side here. However, what is this wave B then, right? It can't be a zigzag in a nice 535 over here, because then preferably we end it here. And in a double zigzag, WXY, your wave Y didn't go above wave W on some charts, and your wave Y is incredibly shallow. Take a trend-based fib from the low to the high of W to the low of X. 0.618 is all the way up here, which would be like a minimum target for a wave Y. So that doesn't look too great. A triple zigzag is very rare. A flat structure is not relevant. Triangle here is also not relevant. And then we get to a WXY sideways double combo, but this is a structure up and not a sideways move. So it does make it very difficult to end a wave B at this high over here, which therefore lowers the probabilities for a zigzag A, B, and then a bigger wave C to the downside to move to the downside immediately, taking the low at 56K first before the all-time high then at a later stage, as after a zigzag down, you expect a continuation to the upside. Now, the most common target for C is between the 1 and the 1.236, taken from the high to the low of A to the high of B with the trend-based fib extension tool, 54.6K, 50.5K. And then finally, I changed this one a little bit. We're going to cover the probabilities in a second. A sideways double combo, WXY. Now the same problem here is your wave X, because inside X you have A, B, C to the upside if we finish wave X over here. And even though wave C is nice in time compared to A plus B, your wave 4 here is a little bit of an issue, right? So that is not the greatest impulse to the upside. However, a wave C at least does like to end on a high amount of volume. So on the lower time frames, I showed earlier on the 4-hour chart that the volume here is highest in the latest move to the upside, and that is something that you do like to see in a wave C. So arguably counting this a wave C has a higher probability than counting this a wave 1, right? Now then we look for a wave Y to the downside. We are already ranging now behind the 0.382 fib time taken from the start to the end of W to the end of X, which was on the 4th of June. So that is very nice. And the most common target area for wave Y is between the 618 and the 1.236 here, 63.1K, 54.3K. And guess what? The 63.1K area is bang in the middle of the support area that I've shown here earlier, right? So that is some nice bit of confluence at 63.1K. Now wave Y can either be a zigzag, flat, or a triangle. A zigzag doesn't work coming off this high for a 535 because again some charts have taken the high here, which isn't allowed in the zigzag ABC. A triangle, well, at the moment doesn't look like a triangle, also invalidated. So that means we have to look for a flat ABC where we then need an impulse to the downside locally, ending somewhere inside the target area for Y and then move to the upside. It is very unlikely for a wave Y to move below the low that we have here at 56K. So that means that the price action of the WXY to the upside here in the bigger flat, the bullish scenario with a 1-2 continuing to the upside, and the WXY is similar. So the price action between these scenarios is exactly the same. It's only what happens afterwards that is going to be different, but the price action is the same, where you expect the all-time high to be broken and then we take it from there. Now quickly on the lower time frame, we have over here some resistance to the upside. We hit support, right? First of all, very nicely respected here, 65.1, 65.3K, beautiful bounce to the upside. Not gonna lie, about a 2%, 1.5% move in total. We do have some resistance to the upside here, 66.7K to 67K. Not to forget that on the 15-minute time frame, we do have an 886 touch here for the beginning of the structure to the upside. And at the moment, this move up does count a bit better as a 3-wave structure instead of an impulse, a 1, 2, 3, 4, 5. Look how long your wave 4 is as well. So we could continue to observe this structure, but at the moment it looks better as a 3-wave structure here so far compared to this being a 5-wave structure. And it is weekend now. Generally, the weekend is famous for its weekend ranges, so supposedly we have enough time to observe what's going to happen here, as the probabilities are higher to continue this range over here throughout the weekend, and then we'll see what the weekend is going to give us. No? Now, with regards then to the probabilities, we have over here the box on the daily time frame. The probabilities are highest for the flat, impulse, and the WXY as explained, because all of these would lead to price taking the all-time high before a potential bigger drop, right? But the bigger drop is just something that happens after the all-time high. So the moment we then take the all-time high, right, we can check what happens. We can assess the probabilities, we can look for ranges to form, and if there are signs of weakness, we can look for price to move down. If there are no signs of weakness after taking all-time high, we look for price to continue to the upside. But at the moment, the highest probability scenarios are the scenarios where we move up for the all-time high after we have a bit of a retracement here, and then we look for price to move to the upside. Higher probability than the second scenario, which is the zigzag, where we look for a wave C, where the 56K low is going to be taken first. Now locally on the 15-minute/1 hour time frame, the move to the upside counts best as a 3-wave structure at the moment. Also got an 886 touch there at the low to keep in mind. So the probabilities at the moment would be higher to range here locally for the weekend, and then take the low that we made over here at a later stage. The best area of support, as explained, is between 63.5K and 62K, and the first area of resistance is 66.7K to 67K. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.